All right, our linked article here says a $400,000 tax deduction for business owners meet the cash balance plan. So that obviously references a specific example for a type of business, but we've seen plans that can help business owners make massively higher tax deductible contributions than they're used to in something like a traditional 401k plan. So Scott, I wanted to chat with you briefly because your team is an expert in plans like this and specifically in cash balance plans. So I thought who better to have a quick discussion with to illuminate us a little further on what the plan is and who it can be a fit for than you. So thank you so much for being available here today.
Yeah, thanks, Josh. I appreciate the opportunity to speak with you. Thank you.
So would you mind just giving us a brief high-level overview of your team, what you guys do, a little bit of background?
Sure. I'm a retirement actuary. Our firm, McHenry Advisers, is a actuarial and retirement plan third-party administration firm. We started in 2006. We have about 2,200 clients, all of them for-profit, closely held businesses and business owners. So our focus really is on the closely held business owner and showing them ways where they can make large tax-deductible retirement plan contributions, reduce income tax very effectively, save for retirement. Josh, we have 9 enrolled actuaries, advanced market attorney. Really, try to take a concierge approach just to make the concept of pension plans, which can be complicated, as easy as possible for business owners and their advisors.
For in case somebody's not aware, what is an actuary? What does an actuary do?
Sure. In this instance, a actuary is required for a defined benefit or cash balance pension plan to certify to Internal Revenue Service, Department of Labor, Pension Benefit Guaranty Corporation, that a pension plan has satisfied all their requirements, that it's adequately funded to provide the benefits that the plan documents provide for.
Yeah, that's awesome. These are the types of things where when people hear about them, they tend to think, "Oh my gosh, can that possibly, is this one of those things where the IRS is going to find out in a while that we've been doing this, and then they're going to come and ask me to pay a bunch of it back?" And the answer is absolutely not. These are
Yeah.
well-worn, time-tested strategies that require expertise to implement properly. And you need a team like this to make sure that that you are dotting all the I's, crossing all the T's, because when they are, they'd sail through. There's not a question mark out there.
Oh yeah,
Yeah.
absolutely. I mean, it's pension plan rules are complicated. We try to make it as simple as possible, but big picture, the rules allow a business owner to contribute large amounts, save a ton in current income tax, right? Are the same rules that apply to General Motors and very large company pension plans.
Well, and that's why a partner like your guys' firm for us is so valuable because this stretches beyond our expertise in this niche area. So, yeah, you guys are true experts in this area. So maybe give us a high level overview of what a cash balance plan is, since that's the focus of this specific article and case study.
Yeah, a cash balance plan is a tax qualified plan, right? So, which means that it can be funded with pre-tax dollars. Investments generally grow tax deferred, right? Like 401k, profit sharing plans, simple plans, or SEPs. What's different is it is technically a defined benefit plan. So, which means that the actual benefit that the plan provides is written into the plan document. And for our world, where it's really applicable is it allows a much higher level of deductible contributions than other types of retirement plans. So for the individual, for the business owner that's looking to save a lot for retirement and wants to reduce income taxes, it is a go-to solution.
So, when in your experience, who are the folks who this makes the biggest impact on? So, there's obviously lots of different types of businesses out there. Some this can be a fit for, some it might not be as great a fit for. Who's the like right down the strike zone type of a business owner who, when they see this, they should think this is probably me?
Yeah, a closely held business owners, so an individual that owns all of a company, or has 3, 4, or 5 partners, right? A closely held group, high income, and they want to save on current income taxes. Ideally, someone that wants to fund more than they can to a 401k plan, upwards of 100,000 or more, ideally.
So
Um,
is that a benchmark people should think about? Once you want to put away more than about $100,000 a year, a cash
yeah,
balance plan might be worth your consideration.
right. If you have a 401k plan or you have a set and you're being told that you've contributed as much as you can,
Hmm.
then that is absolutely when you should look at adding on a cash balance plan. And
Gotcha.
it's not mutually exclusive. You can have a 401k and a cash balance plan going at the same time.
Got it.
But it's a way to allow larger contributions.
Yeah, and
Uh,
that's something you guys have kind of helped a handful of our clients with is okay, I've got my 401k and my match. The next level was I added some profit sharing. Now I'm putting some more dollars away, maybe in that 50, 60,000. If it's me and a spouse, maybe I can get close to that 100,000 a year between the two of us and save that on taxes. But once I get beyond that, I've pretty much tapped out my 401k and my profit sharing plan. And so that's when a
yeah,
cash balance plan, that's like building Legos kind of. You
yeah,
start at the
sure.
base and then build on top of it and up and up it goes.
Yeah, absolutely. So if I look across our clients, 30% of them are professional service type firms, medical, dental, law firms, investment advisors. Another 30% are owner only type companies.
Mm,
So you think if I have 1099 income, but I don't have any other W-2 employees, right? I might be a great candidate for pension plans. So a lot of commercial or residential real estate agents. A lot of individuals that may have side income can be great fits for pension plans. And then beyond that, it's a lot of family owned or closely held businesses, manufacturing, construction, consulting firms, agriculture businesses. So there's not one specific industry that really sticks out. It's more high income, closely held business
gotcha.
is, yeah.
So, if you can, obviously these are very different based on the type of business, the revenue, the owners to employees, and lots of different factors here. Do you mind sharing a quick example of what a plan like this could look like?
Sure, happy to, Josh. What's what I'm sharing here is something that's pretty representative of a lot of our clients, and I know there's a lot on this page, but big picture, two business owners that are pretty high income and a few W-2 employees.
So let me make sure I understand what I'm looking at here. So this is representative of one business. You've
Mhm.
got two owners, owner one, then owner two, and then they have three employees. So owner one is 55 years old, owner two is 45, and then their three employees are 50, 40, and 30. So this total business, including the owners, is five people.
Correct. Yeah.
Okay, got it.
Yep. And they were looking for a large tax deduction. So we set up two plans in this example, a profit sharing or 401k plan and a cash balance pension plan. Big picture, the business owners were able to contribute large amounts, over 600,000 for the two of them. Doing so is going to save them 224,000 plus in income tax, right? That's just a federal income tax. If they're in a state that has state income tax, there's going to be additional tax savings.
So what I'm seeing here is if I trace along, at the end, owner one is tax deductibly saving 358,000 for herself, 248,000 to the owner number two, and then a total of 12,000 that was required to go to the employees here. So a couple things happened. One, 224,000 less in taxes go to the government, and then
Mhm.
12,000 more goes to their team. So they were actually able to take a bunch of money they would have paid in taxes and keep that in their pocket, and take some of the money that was payable in taxes and give it to their employees instead.
Right. I would put forward that this is a terrific retirement plan for the employees. 10% of their W-2 compensation and company paid retirement contributions is great, a great retirement program. But big picture that the business owner saved over 200,000 in income tax, right? They kept 98% of every dollar that goes in here, right? So immediately a lot better off than paying 37 cents on their last dollar of income to IRS.
Gotcha. Super helpful. Thank you for sharing this. Yeah, and again, for anybody watching this who owns a business, you should note that this type of structure, how the numbers shake out, it's going to look very different from this business versus the business that you might own. And so, Scott, one of the reasons, and unless there was anything else you wanted to share here, we can probably take that off. Thank you. The message I would send out to business owners would be your team is, Scott, your team is one of the best resources to help answer the question, is this right for me? So you guys for our team have done dozens of analyses, helped us identify some business owners that are not a fit for this. Because the amount they're going to pay in taxes is not more than offset by maybe how much they're going to, what they would have to give to the employees. It's just not the right fit for them. And then others
Right.
where it's just a home run, like that example that you just shared
Yeah.
now. So tell me if this sounds right. A business owner doesn't have to be sure that this is a fit for them. They just have to think it might be a fit for them. And then a discussion with an advising team like ours in collaboration with an administrative team like yours can help them figure out if this is actually a fit, and 100% not afraid to rule it out through that investigation
Right.
process. There's a number of these that we go, hey, this just is not the right fit, and here's why.
Yeah. Yeah, absolutely. It's very easy to do an analysis, right? To just to take a look to see if it might work. And oftentimes it does, sometimes it doesn't, and that's okay. A couple other things. What I showed is kind of, hey, this is an ideal census, right? But we always can dial down funding. So I showed very high levels of funding, but these plans are also flexible. So if you have a business owner that wants a large contribution one year and wants to dial down the funding, we can make that work, right?
That's great. Well, Scott, this is super helpful. Thank you so much for being available to share with us the role of your team and how business owners can utilize these plans. If anybody's watching this and has questions, you're welcome to reach out to our team. Link at the bottom of the email to have an initial consultation with us, and we're happy to help figure out if a strategy like this could be a fit for you. So until then, we hope this has been useful to you.